What have I told you? There's actually a strategy that is quick and easy to understand and also repeatable. Now, that is where this scalping strategy comes in. Let's not waste any more time and let's get right into it. Now, to show you that this actually works, these are the results from October. I've been using this strategy for as good as every single trade this month. And as you can see, it has been working very well. My win rate was very, very good this month. But of course, we can also be lucky for 1 month. So these are the backtesting results from a session that I did not that long ago. And we're also going to do it ourselves as well at the end of the video. So to understand the strategy completely, you need to understand 4 things. The first one of that being is liquidity, but not any liquidity, London liquidity. So for London liquidity, you need to know the London high and you need to know the London low. So what is this exactly? Now, if you have a chart right in front of you, that looks something like this. You have the start of London session, and the end of London session. And then this would be your low, and this would be your high. So we're basically just waiting for London high to be taken out, or for London low to be taken out. As simple as that. How do you make this a little bit stronger, that you're not just guessing and waiting if one of these gets taken out, you get in? That is where the trend comes in. If you include the trend, because for example, right here, we can see that we are super bearish, then we're going to be looking for London high to be taken out. If London high gets taken out like this, and make sure that you keep watching because we get exactly to this right here, how to trade this in this video. But if you get this, then you're on the right path. But let's say you're super bearish like this, and price, instead of going up higher right here, it went lower and did something like this, then it does not mean this is going to be a good buy, because this could mean that price will just continue lower. So that is the difference that you need to know, and that's the difference that you need to make as well for yourself. Now, before we continue, I want to do a quick plug. If you want help with this, if you want me explaining this live to you on a one-on-one call, and basically just helping you with any question, keeping you accountable, looking over your trades, helping you with your psychology, then my one-on-one program might be for you. I have a couple of spots left this month, and if you would be interested in something like that, check out the first link in the description. It will be a 12-week program. It will be pretty intense, but one thing is certain, and that is that you will know how to trade, because that is literally the guarantee that I have in place, that you are getting funded plus a payout after 12 weeks, or I keep coaching you for free. So check the first link in the description and let's get back to it. Now, the second thing that you need to know is the FVG gap. And probably a lot of people know this one already. If you don't, FVG gap is basically this 3-candle pattern, where the middle creates the FVG gap that everyone knows. It is a place where price did not trade into. Now, if it would have looked something like this, for example, where you have a wick as well, and a wick right here as well, then this will be your FVG gap. But let's say there are wicks like this, there is no FVG gap. Okay, I hope that is clear. Now, the FVG gap, but not any FVG gap, it needs to be the right one. For a bullish scenario, for example, we can all see that this is a FVG gap. Is this the right FVG gap? Yes, it is. And why is that? To determine if this is the right FVG gap or the wrong one, we need to always look at the third candle. So in a bullish scenario, it will be this one right here. In a bearish scenario, it will be this one right here. Okay? So bullish, the top one, bearish, the bottom one. Now, if the top one looks like this, where it is very bullish, you can assume that this is the right place to trade because there is a lot of displacement going on. Now, what if the candle looks something like this, where you have a big wick coming out of it like this, and this is basically showing you intent that price will turn around. Now, some of you might say, okay, it will turn around to the FVG gap and then move up higher. What I often see is that this tells you way more than that. So that it's not only going to turn around to the FVG gap, but that it most likely will turn around completely, because it will seek more liquidity than it is going to get right here from this FVG gap. Now, what in a bearish scenario? In a bearish scenario, again, this one showing that it is very bearish. But let's say we have the same scenario right here, where there is a big wick coming out of it. This one now shows displacement for the other side, for the bullish traders, meaning that we're probably going to see price burst through this FVG gap. Now, normally, the price burst through a FVG gap like this, especially on a 5-minute, doesn't really matter. But it does matter when we're scalping and when we're day trading. Now, if you would be, let's say, for example, swing trading, your entry would be right here, but your stop loss would also be way up here. So if price comes to get liquidity, it does not matter because you're still safe. But for us, we need to be more accurate, as we're only seeking to get a small portion of that move instead of the very big move that swing traders are looking for. Now, what if you have something like this in the middle, where you still have a bit of a wick, but you can say it is still very substantial and very bearish? Take the position, okay? Only when it looks very obvious, where the bearish candle is very small or the wick is very big. something like that, you don't take the position and you just avoid it. You just let it go. It will save you so much money. Now, obviously, if these small trades don't count, if it is going to go bullish, it definitely doesn't count, right? You definitely want to avoid it if price is going against you. So if the third candle is a bullish candle in a bearish scenario, you don't trade it. If your third candle is a bearish candle in a bullish scenario, you don't trade it, okay? That is what you avoid. That is how you're going to trade the right FVG gap for the rest of your life. Now, the entry time. My entry times are in GMT plus 2, okay? This is where I live. I live in Europe, so I'm trading in GMT plus 2. If your time zone is something else, go to Google, go to time zone converter, and put in your time zone, okay? GMT plus 2 to wherever you live. Now, my entry time, or not my entry time, but what you need to know is we're looking for these London highs and lows. We want to see that happen between 8 and 12 a.m., okay? This is midday. Is it 12 p.m. then? I don't know. I use the 24-hour system. But between 8 a.m., I know that, and 12. And then I enter between 1 p.m. and 5 p.m. Now, why don't I enter at 12? It is because there is a lunchtime between 12 and 1 p.m. and it's most of a dead zone, right? You don't really want to trade that as there's not a lot of volume, a lot of manipulation. So you enter between 1 p.m. and 5 p.m. Now, so this means that if price does something like this, and this is 8, this is 12, this is your high, this is your low, and you see that we're already trading above us right here. Do we enter? Depends. If it is 1 p.m., yes, we do. And if we get a FVG gap, yes, we do. Okay? Now, let's say you don't have the time to trade 1 p.m., 5 p.m. By the way, I'm not glued to my screen like this 1 p.m. till 5 p.m., 4 hours a day. No, I'm doing my other work. I'm doing my thing. I just put alerts on this one. I put alerts on this one. And that's it, right? Then if I get the alert, I look at the charts. And I see, okay, is this the right one? Does it look good? Is it aligned with the trends? Is there a 5-minute FVG gap? Can I enter? That is what I look for. So probably I have like 30, 35 minutes of screen time on the charts a day. If you don't have this time, right? If you don't have the freedom to even watch the alerts, trade 1 p.m. till 2 p.m. or till 3 p.m. Whatever works for you. Yes, you will miss some setups, but it doesn't really matter. In the end, over the long run, it definitely doesn't matter. If I do something in 2 months because I get 1 or 2 setups more than you, and you do it in 3 months, who cares, right? It really doesn't matter. These are the entry times. This is what I'm looking for. Now, the last thing that you need to know is you're entering your stop loss. So I already said that briefly, but we're looking for a 5-minute FVG gap. So everything that happens right there can be on a higher time frame. You can watch it on a higher time frame. That really doesn't matter. But you're going to trade a 5-minute FVG gap, meaning that this are 5-minute candles. Okay, 5 minutes, 5 minutes, 5 minutes. Now, where are you going to put your entry? Let's say in this scenario right here, and let's say it was a great position to take. You are going to take your entry right here, just on the beginning part of the FVG gap, right? So if price comes in, it taps and it goes. That is what you're looking for. Even if it goes up higher, it doesn't really matter, because where is your stop loss? It's going to be above the first candle of the FVG gap, okay? Or below the first candle of the FVG gap. Make sure, and depends on what you're going to trade, but make sure there's at least 5 pips. Don't scalp too much into it, because we want to have some margin for error as well. So if this is, let's say this is 3 pips, make it like this 5, okay? And that's about it. Now, let's get into FX replay, and let's show you how it works as well. Okay, right now we're in FX replay, and let's put this to the test. By the way, if you want to backtest yourself, I would highly recommend FX replay. Simply the best in the game. There's also a discount code in the description, and you would help the channel out if you use the link to check it out as well. There's a free trial included, so you can check it out if you like it or not. Now, let's see how this is going to perform for us. First of all, we want to go to the New York session. Now, as you can see, we are in a downtrend. This was a trade that I've taken right here, as I thought we were still going up, but it is clear for me now that we're in a downtrend. So we are going to mark out the London highs and the London lows. So London high for us is right here, and the London lows are these two right here. Now, we are going to expect that we're taking out this high, and then we're going to hopefully get a FVG gap lower, get in right there. That is the game plan, right? We're not looking for these lows to get out. Probably bigger picture we could, as if we're zooming out to the hourly, we can see that we are bullish. So let's go back to the 5 minutes, and let's wait for that displacement lower. Okay, here we have it. Very, very clear. very big fair value gap, and the second candle, better said the third candle, is obviously very, very bearish. So let's look at the timing. The timing is also perfect. This is after 1 p.m. our time, and we can get in, right? So we're taking a short position right here. Let's put our stops above these highs, this high from the fair value gap, right? But when you're close to a high like this, where there's a swing high, then always put it above the swing high or below the swing low. And also, let's say, for example, the fair value gap only came right here. I still don't like it because I want it to be as close as possible to that swing high or low. That is one of my rules that I have as well, that I think I did not mention before, but here you have it, right? Always remember that. Then we're going to target the continuation. So we're targeting these lows right here. We're placing the order, and as you can see, on XRP is very nice. It fills it out automatically for you. So you place the order like this, and now we're going to wait. Okay, this was a very big spike. It was news. I don't really avoid trading using this strategy unless it is NFP or something, or FOMC, right? Very big events. There we have it. A very nice continuation trade towards these lows. I'm curious if we're now going to turn around completely right away, or no, we're still continuing a little bit lower. As this was a very attractive liquidity point for me, I would say. Fine. This was a very nice trade. Let's go to the next New York session. No time to waste, right? Oh, see, we did turn around right here. We did turn around very, very steeply right here, but this was after 5, so not really tradable for us. Now, the highs, the lows are somewhere this candle right here. Bam. I would like to see the lows being taken out. As if I'm looking at this, right, I'm seeing consolidation, taking out these highs, taking out the lows, and probably I would like to see it to go a bit higher. But on the other hand, we could also see a continuation lower, but I prefer the lows to be taken out to see a continuation higher. I was looking at this value gap right here as we created this one, but the entry came after 5. So we can't trade this one. So no trade today. Let's go to the next New York session. These are the lows. These are the highs. Nope. These are the highs then. All right. And when looking at this, I would probably prefer shorts. When I see these triple tops right here, right? And I see us being struggling around these value gaps. The higher time frame is saying a very big consolidation zone. I think I will be looking for shorts. Main reason is being high consolidation zone, and I do believe we are going to get a pullback. So I will be looking for shorts, and let's see what is going to happen. Let's make sure we're not missing anything. Okay, here we have it. Very big fair value gaps, very bearish candle. Let's put these stops above this high, and let's target the continuation like this. Place the order, save, and we're tapped out. Let's see if my direction was right or if I was completely wrong. Okay, it looks like my direction was right. This is unfortunate, right? Sometimes this happens and nothing you can really do about it. Sometimes you can get a re-entry, but right here, there was really no point in looking for that. Let's go to the next New York session. These are the lows and these are the highs. Again, I want to see the highs being taken out. Same bias. Moving up a little bit because it is taking a while. It's almost 5 p.m. There we have one, but the entry time is already over. So let's go to the next New York session. These are the highs and these will be the lows. Now we are trading fairly bullish again. And I'm so all over the place on my biases because we are in this very big consolidation zone and have to judge a direction on the lower time frame, which is a bit more difficult and a bit more unreliable, I would say, than on the higher time frames. Because if I look at the high time frame, overall we're bullish, but we are consolidating for this long. So I do expect some type of a pullback or at least some type of liquidity grab underneath these lows. That's why I'm very cautious, I would say, with what I'm looking for. And it is just consolidating between those. Okay, New York session, the next one. These are the highs. These are the lows. By the way, when I mark out the highs and lows, I always use the candle bodies. For this one, we have been tumbling down. Again, I'm going to be looking for the highs to be taken out in this scenario and continue short. We have it right here, but obviously no fair value gaps. So that is something, yeah, we have right here right now. This third candle is still fairly bearish. I would say I am going to take the risk. Stops above the high, and I want to continue this trade to the downside. When I'm facing a point where price could turn around, like London lows or an order block or a big fair value gap, I always put my TP in there or around there, because I don't want to take the risk of this completely turning around where we take this one out, just to squeeze out a little bit more of that position. Okay, very nice position as well, this one. We came fairly close to stop loss, but we were able to stick it out. So we took out these London lows. Let's see if we turn around. No, we just completely go through those. Let's go to the next New York session. These are the highs. What do I want to see? Probably these highs will be taken out as well again, to see us continue lower, but I do think we can move up a little bit higher for a bigger pullback and then move down lower. But I don't think we need liquidity for that. There we have it. Very big move to the upside. Did I miss anything? We could say that I missed this one. This could have been an entry and it would have been stopped out, to be honest with you. But like I said, I did not really like it, as I do want to see it go higher. I did want to see it go higher. Now I would enter, but this third candle is not nice. And it is also after 5, so... Okay, this could have been a loss. This could have been a loss. If I was following the rules very, very strictly. And that is something that I always want to add in my videos, is that the strategies work if you follow them exactly to the rules, like super strictly. They will still work. But I think if I'm looking at it in retrospect and third person, then I'm probably performing my strategies a lot better, because subconsciously, due to experience, I'm avoiding certain setups. And these are things that I cannot really include, as then there will be 100 steps to the strategy. When you're backtesting, just look at your positions, look at what the strategy is doing, and see if you can improve it. See if you can start to avoid things as well. And maybe you can include it then in your strategy. Let's go to the next New York session. Wow, very big move to the downside. This is interesting. Okay. Now, what do I want to see right here? Yes, we're obviously very bullish, but I think I want to see a pullback. We move down. We're taking out liquidity once again now. And I think we could see a pullback to this order block right here or above. But this would be the first threat, so to say, right? The first point of sabotage. So I think we could see a pullback. I definitely am not going to be seeing these highs taken out to move lower. If I see the prophetic gap, let's see, I'm going to take the chance, even though I'm probably trading against the trend. I do see the prophetic gap, right? It is a very strong one, a very good third candle as well. Let's put these stops right here. Let's put the target right here. 1/3. I think that is fine. Probably my stops a little bit lower, somewhere inside of this candle. And let's just put it, yeah, like this is fine. Why am I not doing this? Because this would mean that price has to go over it. Then I can look at the next targets right here. But if you're targeting an order block, always target the lowest point of the order block, or somewhere in between, right? This gives us a 1/2 as well right here. Place the order, safe. Okay, this one is going very nice. And this is a very, very scalpy trade, by the way, obviously. And we have tapped the order block. That's nice. Let's see if we continue higher. We don't. Always remember that if you're targeting, target a bit below it or target a bit above it in the downtrend to make sure that your targets are getting hit. Because the amount of people that I see that put their targets right here or right here, and then they are surprised that the targets are not hit, is insane. So just play safe and don't be greedy with it. All right, what do I want to see? Probably again a continuation higher. So I would like to see a prophetic gap being formed. There's a prophetic gap being formed right here, but again, remember what I said. If I want to take an entry right here, my stop loss, it's so far from the lows that I don't really like it that much. So I'm not going to do that. Even though it would have been a good trade, right? Moving up higher. And now it is 5. So let's go to the next New York session. And these are the choices that you need to make. Are you going to include trades like this? If you do, then you're probably going to win some trades that you would have missed otherwise. But if you don't, you're going to protect yourself so much against very, very big losing positions. And we're just consolidating until the end of the session. I probably want to see continuation higher as we've taken out these lows right here with this move. We are moving away from there. So if we take out the lows and we get a good fair value gap, then I would like to take it. There we go. Can we?
as we're so far away again. We are very far away. Okay, what I'm going to do is I'm going to just put it right here. If we get tapped in, we get tapped in. If we don't, we don't, right? Targets, just these highs. Place the order, save. We are tapped in, by the way. We're consolidating and we're moving lower. Okay, could have been something, but unfortunately, we were short a little bit. This is a good thing to mention as well, again. As you can see, my target were above these highs. And a few trades ago as well, when I was targeting the London lows, it is above these highs. When I'm targeting London lows or London highs, I'm expecting it to take them out, right? So then I am expecting it to go over it. But when I'm targeting an order block, I am expecting it to react to the order block, right? When I'm targeting a FVG gap, I'm expecting it to react to a FVG gap. So, for example, let's say I'm targeting this FVG gap right here, all the way around. Let's say I'm targeting this FVG gap right here that we have. Then I'm targeting the lows of the FVG gap almost every time because I'm expecting it to react to it, right? That is something important to mention. Let's go to the next New York session. By the way, as well, just take one trade a day. Unless you really see a good second chance that you might get, don't do it, right? Most of the time, just leave it alone. Unless, like I said, you get a very good second chance. So we do have a lot of good FVG gaps right here. I would say we can enter. What I'm going to do is I'm going to put my entry on the last one right here, put my stops underneath these ones, and again, I'm going for that continuation right there. I'm going to place the order, save, and we're through it. Very big move to the upside. Same scenario as we had a few trades ago. I'm not going to wait for these lows to be taken out. I'm going to wait for these highs to be taken out to take a pullback lower, right? Then targets could probably be these highs, maybe like continuation to the previous high, something like that. A pullback, better said. In this case, we can put that above the swing high, but the swing high took out this high right here, so it is a liquidity grab. Then it moved away, and then it created a new high. So I'm just using the most recent high right here. And let's put it on 10 pips to make it very even. Like I said, I want to be targeting the previous highs. So that would be something like this. And that's about it. Let's place the order. Let's save. This will also be the last trade. I think even if this is going to be a loser or a winner, the proof of concept is there. And you get a bit of the understanding of how we do it. I also want to mention when you're going to start to backtest this or when you're going to trade this live, do a lot more research towards your trends. Do a lot more in-depth research. Where is your on the high? Where is your on the low? I'm just a bit flying through it to show proof of concept, but take this very seriously, okay? And also look what can I improve, journal everything, and make sure you're always on top of things. Okay, we're tapped in and we're moving away. That is a good sign. I hope we're not reacting to this small hiccup right here. I don't think we should, right? If we're reacting to this, it would be a very small pullback. Okay, there we go. And there we have it, right? Very nice. Pullback to the downside. I'm curious, are we going to take out the London lows or not? A good idea as well to take your profits before midnight, as you don't really know what's going to happen overnight. And even though if we continue lower, doesn't really matter at this point, as we've taken a lot of profits right here. Now, let's go to the analytics real quick. Now, as you can see, our win rate is 49% over 51 trades. So I've been doing this session a bit longer already, and we have now reached 50 trades. So 49% is very good, but we did have a 63% increase in P&L. Our average reward was 3.5, or max 6.9. Which is incredible, obviously. Best win 5.6%, average win 2.7%. So it is looking very healthy right here. Yeah, let's see, what was the last bit that we backtested? It was this, I believe. We backtested the month of May. So we had 1, 2, 3, 4 winning positions and 3 losing positions in the month of May, which results in, I believe, like a 60% win rate even. So that is also very nice to see. But the win rate is not really that important, even though it is important if you're struggling with psychology. But what makes it very important right here, or the most important thing right here, is a profit factor. And that's basically your win rate times your risk to reward. And as you can see, our risk to reward is very healthy with a minimum of 1/2. So minimum of 2,000. 1 when we only risked 1,000. So our losses are always capped to 1,000, but our wins are 2,000, 3,500, and 4,500. Which makes it very healthy. Now, I hope you enjoyed this video. I hope you learned something from it. Go backtest this. check out FX Replay, check out the one-on-one if you want to be coached by me. And I would say let's make sure that you're getting profitable before 2026, and then we can start absolutely killing it. Have a nice one, and I'll see you in the next one. Bye-bye, guys.